Hello, welcome to the European Open briefing for Thursday, March the 9th. I'm Rafi Boyadjian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we saw a big jump in the US dollar yesterday following the release of very strong ADP employment numbers. The ADP is a private survey similar to the NFP report, and it's also seen as a good indication to what the official numbers will show, which is due out on Friday. So we saw the strong numbers boost US Treasury yields, and markets are now pretty much fully priced in a March rate hike at the Fed's next meeting on the 15th. The stronger dollar, of course, weighed heavily on commodities and commodity currencies. The Aussie and the Kiwi are down sharply. So there was also mixed sentiment on the latest Chinese inflation data out earlier today. Oil was the worst performer from the commodities, though this was more to do with the latest US inventory numbers rather than the dollar. US crude stocks rose sharply last week, so we saw oil prices, we saw heavy sell-off in oil prices, which was the worst in a year. And later today, we've got the ECB meeting coming up, and the euro had a weak start to the day going into the European session. But let's begin now with the dollar-yen pair and the dollar index. We can see here that big jump yesterday after the ADP data, both against the yen and against other currencies. The dollar rose sharply. Against the yen is currently trading around 114.50 yen, and the dollar index rose to 1 week high as well. The ADP National Employment Report showed private payrolls rose by 298,000 in February. That's much better than forecasts of 190,000, and it likely means that we will see very positive numbers as well on Friday from the official non-farm payrolls report. And all of this is, of course, boosting further those expectations that there's going to be a rate hike on March the 15th. The 2-year yields on US Treasury notes rose to the highest since 2009, and the 10-year yields rose to an 11-week high of 2.583%. And of course, gold was a major victim of this. It extended its weekly losses to a fresh 5-week low, $1,203.25 an ounce. And this mainly, of course, a stronger dollar, or dollar has an inverse relationship with gold, so higher dollar and higher US yields have a negative impact on gold prices. And also on commodities overall as well. We can see here in the chart that both the Aussie and the Kiwi are not having a very good week. The Aussie dropped to 7-week low of 0.75, and apart from gold and oil, metal prices have also been falling, which Australia is a major exporter of. We had some Chinese inflation data, which was kind of mixed. Producer prices rose to 7.8% year on year. Slightly above expectations of 7.7%, but the consumer price index rose by just 0.8%, well below forecasts of 1.7%. So markets were a bit didn't know how to digest the data, as maybe it's an indication that perhaps generally the rising producer prices is seen as a positive sign because it means rising demand in China, but this perhaps puts that into question, although it's more likely that the CPI, the weak number, is more to do with the distortion from the Lunar New Year and at the end of January and early February. The New Zealand dollar is also not doing too well. It dropped to 2 months low, 0.6888, and of course, apart from the commodities in general, specifically for the Kiwi, dairy prices fell at this week's auction, so there's a lot weighing on those two currencies at the moment. And crude oil prices now, we can see that big slide yesterday, and that was in fact the worst daily performance for crude oil prices since February last year. We saw a very big build in US crude stocks yesterday from the EIA data. US crude stocks last week rose by 8.2 million barrels, beating expectations of just 2 million barrel increase. And despite that, though, distillate and gasoline stocks fell by more than expected, and this initially boosted prices soon after the data release. But then, of course, the markets were once again worried about this global supply glut and how effective the current output deal between OPEC and non-OPEC countries is. So we saw that big slide yesterday in oil prices. US crude stocks fell to around $50 a barrel, although it's attempting a rebound this morning. It's up 1%. Moving on to the European currencies, we've got the European Central Bank meeting later today, and the euro was last trading slightly down on the day. We did have some French opinion polls out this morning, which put the independent candidate Macron slightly ahead of Le Pen in the first round of presidential voting. So that's overall should be seen as a good sign, but markets are cautious going into the ECB announcement later today, and of course we're going to have a press conference by ECB President Mario Draghi as well. He's not likely to signal the end of the easing bias nor the start of QE tapering, but it's likely that the central bank will raise its inflation and growth outlook and probably sound less dovish overall. So Draghi is always, of course, very careful not to sound too hawkish, as so as not to put upside pressure on the euro. The pound is not doing too well either. It hit a 7-week low. Though it did stabilize after yesterday's UK budget, where the new finance minister he basically took a cautious approach. He didn't give too many tax cuts or spending away, and he basically is attempting to build up a cushion, budgetary cushion, in case the economy worsens significantly once Brexit negotiations get underway. So there was some positive impact from that. But overall, as we get nearer to that Article 50 date where it's going to be triggered at the end of this month, we're seeing pressure build up on sterling. The rest of the day, apart from that ECB meeting, is looking fairly quiet. We don't have any major data out of the US apart from the weekly jobless claims. And we do have the EU summit underway, getting underway today, where we might hear more about what's happening with Brexit and how the EU will respond to that. That's it from me. Thank you very much for watching and have a great day.